Welcome to your virtual CFO coach. I'm your host, Leah Torbert, founder and CEO of Harrington Strategic Partners. I've spent my entire career working in the startup world, scaling businesses to multi-7 and 8 figures. I built this podcast to share all of that knowledge with you and make your path to success shorter and easier. Tune in each week as I cover topics including financial analysis, cash flow management, holistic strategy, mindset, and more. Now for today's episode. When I met one of my clients for the first time, she was really concerned. She wasn't sure that her taxes had been filed correctly the prior year, and her books were, in her words, a hot mess. My ears perked up at this point because hot messes are my specialty. She was so busy running her business and just trying to get through things that her bookkeeping had fallen to the wayside. To make matters more complicated, she'd actually changed her business structure, but hadn't made any changes in her bookkeeping. She'd just stopped it altogether because she didn't know what to do. The bad news? Her tax return was filed incorrectly. She was using the wrong version of QuickBooks for her business, and she was 2 years behind on her bookkeeping. The good news? We were able to get her books cleaned up in a couple of months, and I introduced her to a CPA who was able to get all of her tax stuff straightened out. Then, over a period of time, I taught her how to manage her bookkeeping using a structured process so she has current financials and can make informed business decisions. Sounds great, right? Falling behind on your bookkeeping can happen pretty quickly. When you log into your QuickBooks file and you see that 99 plus transactions pending notice, it can be really stressful, especially if you aren't comfortable with bookkeeping in the first place. Even so, you can take control of your bookkeeping and get things caught up, even if you're more than a year behind. So, I have a process that I'm going to walk you through, and it's very important to look at these things in this order. The first thing that you need to do, no matter how far behind on your bookkeeping, is to assess your tax situation. If you haven't filed tax returns and or are behind in making your tax payments for the year, the first thing you need to do is contact your CPA. And if you don't have a CPA, you should find one. Ask another business associate or someone else that you know for a recommendation if you can. But otherwise, start interviewing CPAs in your area to find one that will work with you to be able to get your business back in compliance. Let your CPA know what's going on, how far behind you are on your bookkeeping, when the last returns you filed were, all those kinds of things, and talk to them about your options to stop the clock on late fees and penalties, or at least minimize them as much as possible. You don't want to wait to do this. The IRS loves their penalties and fees. So, making sure that you're on a payment schedule and getting all of those things taken care of while you're fixing your bookkeeping is very important. So, the next thing that you want to do is to gather your revenue and expenses information. What I typically see when assessing bookkeeping files is that revenue tends to be recorded as invoices that are issued directly from QuickBooks, which is great, or the file is connected to a software that does issue the invoices. So, for example, you may have an e-commerce platform, or there may be some other piece of software that you use for client management that you can issue invoices from, and that works just as well. So if you have your invoicing already connected or it's already inside QuickBooks, you're ahead of the game. And if you don't, that's okay. You can still come back from that. You can still get everything set up. From an expense information perspective and just general information that you're going to need as you get started with this, you need your login information to any sales platforms, bank accounts, credit cards, cash payment accounts like Zelle or PayPal, loan accounts, etc., where your financial information is going to be stored. You're going to need copies of all of your bills received from vendors, copies of any bank statements, credit card statements, loan statements, etc., that you can't download online. So if for some reason you're still getting something through the mail, you're going to want copies of those as well. And then if your business has any kind of debt, if it's bought any kind of assets, like furniture, fixtures, equipment, vehicles, etc., you'll want copies of all the purchase agreements and any related loan documents associated with those things. And also, with everything that's happened the last couple of years, if you had a PPP loan or an EIDL loan through the SBA sometime in the last couple of years, you want to make sure that you have all of that documentation as well if it's not already recorded in your QuickBooks system. One other thing that I want to point out here, because it's very important, is if you are using bank accounts, credit cards, cash payment apps, etc., for business and personal use, now is the time to stop. Your business and personal transactions must be kept completely separate. So I want you to set some time on your calendar this week. And if you don't have accounts in your business name, get them set up. Find a local credit union or a bank that you bank with, that you have a relationship with. Set up some accounts for your business. Look at some different credit card options for your business and get those set up, and take the time needed to move all of your payments and income funding to those bank accounts. The reason that you want to do this is that you want to think of your business as a completely separate entity from yourself. So that entity is going to have its own liabilities, its own assets, its own expenses, its own revenue. You own it. And ultimately, at the end of the day, unless you have some other partners that are involved, right? The money that the business makes is probably eventually going to go to you. But at the same time, you have to maintain that separation. And one of the reasons that you do that is from an audit perspective, because if for some reason you get chosen for an audit and someone from the state or the IRS starts going through your records and they see some expenses that might be concerning if they don't have all the information. So, for example, if you have a lot of charges in there from your local grocery store, or maybe some of the shops like Target or TJ Maxx or something like that, and you don't have a documented business reason for those kinds of things. There could be some questions around the validity of the financials that you've used to complete all of your various tax reports. And so there could be some questions around, are these legitimate expenses or not? And if you can't prove that they are, then you could be subject to some penalties and fees as they go back and figure out what your tax liability should have been. The best way to avoid that kind of thing is just to keep those personal expenses out. Now, it's okay, like if you buy groceries for your office and you have a receipt from your grocery store, but you can document and keep that receipt, and you can show, okay, well, I have 5 employees and we maintain sodas and that kind of thing in the office and coffee and whatnot. And that's what this was for. And that's fine. But if the expense is not reasonable and maybe it's too frequent or it's too much compared to what you can support from a business perspective, there's going to be some questions asked. So just think about those things and make sure that you keep all of your personal expenses separate from the business. If you need to take a distribution to pay for something personally, there's a way to handle that to where the funds get to you into your personal account, and then you can take care of those expenses outside of the business. The next thing I want to talk about is connecting your accounts to your QuickBooks file. If you have a QuickBooks file already, you may have done this when you open the file, where it'll walk you through and go, okay, add your bank accounts, add your credit cards, and it will download the charges into a screen, and then you can process them. If you haven't done that, or maybe it's been a little while, now's a good time to go take a look at it and make sure everything's up to date. Because even if you did connect things, maybe you changed your password, or maybe the website, your bank account website or your credit card account website, they could have had some updates and it's not syncing correctly anymore. So you always want to take a look at those one way or the other. But it's really important from a time management perspective and an accuracy perspective to automatically download anything that you can into your QuickBooks file because it will save you a lot of time and you're not manually entering things. So there's less room for human error for that perspective. So once you have everything connected in the file, then you can go through and start the next process, which would be creating rules and posting transactions. I will link down in the show notes to some QuickBooks tutorials on some of the things that I talk about throughout this episode. So if you're not sure how to connect your bank accounts, I will have a link in the show notes for that, linking you to QuickBooks directly so you can watch their video on how to do that so that you have that information. Because I know it may be a little difficult for you to just hear me talk about it and then go, oh, well, I don't know what to do. So I'm linking that down in the show notes. Once everything's linked, QuickBooks has this great ability to be able to create rules and to allow you to post multiple transactions at once. So in this screen where you've connected all your accounts, your transactions are going to show up in a list. And you can create rules that will tell QuickBooks when this transaction comes in, I want it to be coded as a particular thing. So if you have transactions from the same vendors, you can create a rule to code that vendor to post to your chart of accounts the same way every time. So a good example is, let's say, you get your internet through Comcast. So you can set up a rule where any transaction that comes in from Comcast is coded as utilities, or maybe you want to call it computer and internet expense. Whatever it is that you call it on your P&L statement, you can code it there. Now, one caveat to this that I have with the QuickBooks rules, I don't recommend having the auto post feature turned on when you create a rule. The reason for this is, even though QuickBooks is really good at learning your vendors and doing its best to apply the rules that you give it, occasionally it doesn't get it right. And if it's auto posting, so let me back up a minute and say what that means. If the transaction comes through the automatic download and you have auto post turned on, what it's going to do is read the transaction and go, okay, this is Comcast, and I know Comcast is utilities, so I'm just going to post it. It's done. You don't even see it if you go to that review screen. So you don't know that it didn't post it correctly unless you go review your P&L, which you should do, but that's a whole different step. So I like to turn the auto post function off because then I can see the entire list of transactions. And if I want to, let's say we're 3 months behind on our accounting. We haven't posted transactions in 3 months. So I can actually go through and do a search for Comcast. And let's say there are 3 lines for Comcast. I could look at them very quickly and say, okay, Comcast, utilities, that's good. And then I can select all three and post all of them at the same time. And that's that posting multiple transactions feature that's really nice. So if you have a lot of transactions that are coming through and you're behind on your bookkeeping, you don't have to go, okay, well, Comcast was on March 2nd, and Comcast was on April 3rd, and Comcast was on May 12th, or whatever, and do each one of those. You can filter, post all your Comcast at the same time. And so you can move through those transactions fairly quickly once your rules are set up. And then you can look at what's left after you've reviewed all of your rule applied transactions. So maybe there's a vendor that you don't have a rule set up for, or it came through and QuickBooks just didn't know what to do with it. So it leaves it there, and then you can go through and assign it yourself. And I will link in the show notes to some QuickBooks tutorials on how to do this and what it looks like in the system so that you can go through at your own pace and just make sure everything is good with your coding and posting to your P&L or your balance sheet, depending on what the transaction is. The next thing is tracking your revenue. This is going to depend on where your invoices are generated and how you want to see your revenue data. So, for example, if you sell on Amazon, your sales and expense data can be imported directly into QuickBooks. If you issue invoices in QuickBooks, then invoices you've created are already there. So, the trick might be recording the customer payments and matching the deposits downloaded from your bank. So, that's something that be a little tricky if you haven't done it before, or maybe you're a little rusty because it's been a while. If a check is being deposited into your bank account and you're having all those transactions come through your download, you want to make sure that you had actually recorded the payment from the customer. So let's say ABC Pest Control is a client of yours and they pay you $500 for your services. You want to receive that payment for the customer, ABC Pest Control, and then that payment gets deposited into the bank account once it's actually cleared your bank. And so there's two separate pieces to that. And so you would record the payment first and then record the deposit, because maybe you had a bunch of checks that went in that day. So you would deposit multiple checks together. And that's really hard to explain through this kind of format. So I've also included links on recording payments and recording deposits. That way you can go take a look at those when you have a little bit of time as a refresher or just to learn because maybe you haven't done that before. The last thing from a bookkeeping catch up perspective is looking at your asset purchases and loans. At the beginning of the episode, I mentioned information you would need if you had taken out any kind of loans for the business or if you'd bought any kind of furniture, computers, equipment, etc. So that's where those documents come in. Anytime that you purchase something for the business, it has to be recorded. And typically, if it's little things like maybe you bought a couple of little knickknacks to decorate your office, we typically direct expense those to the P&L. But if they're expensive, let's say you bought an art sculpture for your office building, or you needed a new sign for the building, or you were buying all new desks or whiteboards or something like that, depending on how much they cost, those could be considered what we call fixed assets. And those get treated differently from a bookkeeping and tax perspective. It's more than we really have time to go into here. So it's something that you would definitely need to reach out to your CPA about. But you want to make sure that your CPA is aware of any of these large purchases. I typically use a value of $2,500. There is no IRS rule, but in my experience, the $2,500 has been something that most of the companies that I've worked with have used, and CPAs that I have worked with have recommended it as a good rule of thumb. So it's something that you could incorporate after talking to your CPA about it. But if 2,500 was the line, then anything under 2,500, and this is for an individual item, not multiple items on one bill. But let's say you bought a computer and the computer was 1,500 bucks. You would just expense that directly to your P&L versus trying to inventory it, so to speak, as a piece of equipment that your business owns on your balance sheet. And your CPA can really help you go through all of those things, but just make sure you keep the information, receipts, that kind of thing for those purchases, and provide that to your CPA. That way, when they're reviewing your books for tax, they can make sure that those things are recorded correctly and that you're getting the appropriate tax benefit from those items. The other thing that you'll want to let your CPA know about is any leases that your business has signed. That way they're aware of the liabilities that your business has agreed to: leases, loans, lines of credit. And this includes things like car notes. If your business has purchased a car, or maybe they purchased a piece of equipment and they are having that financed, or some businesses that I've worked with will buy 12 months of insurance at one time because they can get a better rate, and then they finance that insurance purchase. So they're still making monthly payments, but they've bought it all at one time. And so those kinds of things get handled a little differently from a financial perspective. And those I would definitely recommend talking to your CPA about. and just saying, look, this happened. I'm not exactly sure how to record it, and I need help making sure my books are accurate. Your CPA is going to be 100% used to seeing these things and will know the right questions to ask so that they can walk through and make sure everything is in your books correctly. So at the end of the day, if you're behind on your bookkeeping, the most important thing to do is just to start now, even if it's just a little bit every day. Maybe this week you start by getting all your documents together. Get your bank statements, get your credit card statements, look at all your loans and receipts and things like that, and just make sure everything's together. And if you can do that digitally, that's even better, because if you need to bring your CPA in to help you, then they can have easier access to those things. And then just slowly go through a couple hours at a time as you have time and start working through your transactions and getting things in the system and talking to your CPA about your tax liabilities and asking those questions that you need to ask to start moving forward. Because every little bit that you do is going to take a chunk out of that bookkeeping that you're behind on, and it's going to make you feel better about the financial health of your business and your ability to manage it and take care of those financial obligations that you have. Now, if this is something that you are sitting here listening and your eyes are glazing over and you're like, Leah, I just can't possibly imagine doing that myself, but I don't have enough to hire a full-time person to do, then the simple answer to that is to give me a call. If you're using QuickBooks Online to manage your financials, I can help. I have a bookkeeping option through Harrington. It's something new that I've launched here in the last 30 days. And the process for that is to start off by booking a discovery call, which I will also link down in the show notes. During that call, we'll talk about your business. We'll talk about where you are with your financials. Maybe you don't even have a QuickBooks file yet. That's okay. We can help get that set up as well. But we can talk, figure out what you need, and then decide if we're a good fit together. And if we do, the next question is, where do we need to start, right? So we have a bookkeeping assessment questionnaire that I would send out, and you'd be able to answer the questions, and I'd get an idea of just where you are, right? Are you 3 months behind? Are you 6 months behind? Are you like my client that I talked about earlier that hadn't really done a whole lot in the last couple of years and needed a lot of help? And then I can get an idea of what the scope of the project is going to be to help you get caught up. And then I can provide a proposal and we can go from there. I do want to point out that these projects can take anywhere from 10 to 40 hours of work or even more, depending on the complexity of your business and how far behind you are. And if you're behind on your taxes, it's really best to get started right away. Contact your CPA, figure out what you need to do on that perspective. And then if you need help, let's talk. Just reach out and let's have a conversation and just see if it makes sense for us to work together. Thanks for listening to today's podcast. If you enjoyed what you heard today, please share with your network and leave a review so our podcast can reach more women and have a greater impact. If you have any comments or additional topics you'd like discussed on the show, let me know. Before you go, connect with me on LinkedIn and let's keep the conversation going.